You hear the phrase trade war, and you probably think about tariffs and big political headlines, right? But that's really just the tip of the iceberg. The real story, the one we're going to dig into, is what happens after that first shot is fired. It's kind of like dropping a stone in a pond. The ripples just keep spreading out, touching everything.
So, yeah, what does really happen? I mean, beyond maybe your favorite pair of shoes getting a little more expensive. Well, the answer is a whole lot more complex and honestly, way more fascinating than you might think.
All right, so to get our heads around this, we're going to follow the trail. First, we'll look at the big picture, that global ripple effect. Then, we're going to follow the money into the financial markets. After that, we'll crack open the corporate playbook to see how businesses cope. And finally, we'll try to piece it all together and ask, so what?
Okay, let's dive in. First step, that massive initial shockwave that hits the entire global system. This is where it all begins. Let's just get this out of the way right up front. Pretty much every economic model out there agrees on one thing. In the long run, nobody actually wins a trade war. Seriously. Once countries start slapping tariffs back and forth, it becomes what economists call a negative-sum game. And that's just a fancy way of saying the total losses are bigger than any possible gains. Everybody involved ends up a little bit worse off.
Okay, so if everyone loses, does that mean everyone loses equally? Nope, not even close. The key factor here is something called economic resilience. You can think of it like this. How well can an economy take a punch and stay on its feet? And that ability, well, it's different all over the world. And this is where it gets really interesting. Some super clever research actually use satellite data, looking at the lights from cities at night to see who gets hit hardest. And what they found is pretty stark. On one side, you've got these really resilient places, cities that export high-tech, high-value stuff. Think cutting-edge microchips. But on the other side, you've got regions that are basically just processing hubs. They take in foreign parts, assemble them, and ship them out without adding a ton of value. And those are the places that get hammered. They're way more vulnerable.
And get this. Here's a consequence that I bet you didn't see coming. It turns out trade wars can actually be bad for the planet. How? Well, when companies are forced to move their factories, production doesn't just shift. It often moves to places with, let's just say, looser environmental rules. So the totally surprising result is you can actually end up with a net increase in global emissions. Crazy, right?
So that ripple we talked about, it doesn't just stay in the world of factories and shipping containers. Oh no, it crashes right into the world of finance. And that's where things get shaky.
And when I say shaky, I mean really shaky. Just how big are these tremors? Well, one study figured out that the shock from the US-China trade war could explain about 30%, 30, of the ups and downs in US stock prices and treasury yields. Think about that for a second. A single political fight was behind almost a third of all the movement in the market. That is huge.
But here's the thing. It's not just the tariffs themselves that cause all this chaos. It's the not knowing. It's the uncertainty. Fear is a massive amplifier here. When investors have no idea what new rule or tariff is coming next week, they get spooked. And that nervousness just pours gasoline on the fire, making the market swings way more wild and unpredictable. And you can see the whole chain reaction laid out here. It's like watching dominoes fall. It starts with a trade shock, right? That creates policy uncertainty. That uncertainty, in turn, fuels stock market volatility. Then, that shakiness spills over from stocks into real-world stuff, like oil and other commodities. And the final domino? All that chaos jacks up currency risk for everyone, but especially for the smaller countries that are just trying to hang on for the ride.
Okay, so we've seen the global shockwave, and we've followed the money into a panicked financial market. So now let's zoom all the way in. What about the actual companies caught in the middle of all of this? How do they survive on this new battleground?
Well, it turns out they've got a survival playbook, and there are 4 big moves they make. First, they start looking for new customers in countries that aren't part of the fight. Makes sense, right? Second, they hoard cash, piles of it, because when you don't know what's coming, cash is king. Third, they scramble to find new suppliers and rejigger their entire supply chains. And fourth, and this one's key, the really smart ones try to innovate their way out of the mess.
But this whole innovation thing, it creates a really fascinating paradox. It's like a fork in the road. On one path, you have companies that get scared. The uncertainty, the high costs, they slash their research and development budgets to save money. Then on the other path,
you've got firms that do the exact opposite. They see the trade barriers as a challenge, and they double down on R&D, using it as a weapon to get a competitive edge. And the strategies don't stop there. Companies get really creative. Some just give up on exporting for a bit and pivot to selling more at home. Others, and this is clever, they ramp up their corporate social responsibility stuff, showing they're a good company. It's a way to look stable and trustworthy to all those nervous investors. Some even find that just having a strong, positive company culture helps them keep the trust of their suppliers, which is absolutely critical when money gets tight. Okay, so we followed these ripples from the whole globe down to the financial markets and right into the CEO's office. So, what does it all mean? What's the big takeaway here? I think the most important thing to get is this. A trade war isn't a single event. It's a chain reaction, a cascade. The effects are felt literally everywhere, from the planet's CO2 levels all the way down to one company's budget for new ideas. And as we saw, some are just better at weathering the storm than others. The whole thing creates this incredibly complex web of strategic and sometimes totally contradictory reactions.
So it really leaves us with one big question, doesn't it? When the effects are this messy, this widespread, and this unpredictable, can anyone actually win? Or is a trade war just a game where everyone loses, just differently?